All right, let's get right into it. Today, we're tackling the single biggest question dominating Wall Street, and probably your portfolio too. Are these seven tech giants actually building a new world, or are we all just living inside one of the biggest market bubbles in history? Let's break it down.
I want to start with just one number, 28%. Think about that for a second. That is the magnificent seven slice of the entire S&P 500. Just seven companies account for more than a quarter of the whole U.S. stock market's value. This, right here, this unbelievable concentration, it's the heart of the whole story.
So, to even begin to have the revolution versus bubble debate, you first have to really wrap your head around the sheer scale we're talking about. I mean, these companies aren't just market leaders anymore. In a lot of ways, they are the market.
Of course, you know all the names, right? Apple, Microsoft, Amazon, Alphabet, Meta, Nvidia, and Tesla. These aren't just companies anymore. They're the engine. They have become the primary force pushing global market growth forward.
And if you want some perspective on what that really means, check this out. Their combined value is over $12 trillion. That is basically the same as the entire stock markets of the United Kingdom, Canada, and Japan all added together. We're not talking about big companies. We're talking about global economic forces.
Now, there's this hidden engine behind their explosive growth, and it's called the passive investing feedback loop. It works like this. As the stocks do well, their weight in indexes like the S&P 500 goes up. Well, all those index funds and ETFs out there, they have to buy more shares to keep tracking the index. That buying pushes the price higher, which increases their weight in the index again. It's this powerful, self-feeding cycle that creates huge risk even for regular investors who just own a simple index fund.
Okay, so are these giants actually worth the massive hype? Are they delivering the goods? Well, let's pull up their Q2 2025 report card and see what the numbers really say.
And wow, the results really showed a massive split in the group. You've got 6 out of the 7 just crushing it, posting strong growth and beating what the analyst expected. But then you get to Tesla, a big revenue drop and a clear miss. That split, that's the real story here.
Yep, this last earnings season really drew a line in the sand. You have 6 companies that are just firing on all cylinders, and then you have one that's clearly struggling with its main business.
Just look at these numbers. This is the raw power of the AI infrastructure build-out. That absolutely staggering growth is coming from selling the picks and shovels in what everyone sees as a new gold rush. This is a full-blown capital expenditure arms race.
And this really gets to the heart of the split in the group. You see, 6 of these companies are using AI to deliver real, actual performance right now. Tesla, on the other hand, is talking about the potential of AI in the future, almost as a way to distract from its current problems. Its story is all about promise, not proven performance, and that makes it a much, much riskier bet.
So with all that evidence on the table, let's zoom back out to our central question. Are these incredible results the rock-solid foundation of a new economic era, or are they just throwing gasoline on a speculative fire?
You know, it's the classic question that pops up every single time the market gets this hot. Is this time really different? Let's give both sides of the argument a fair shake.
So you've got 2 camps. On one side, the bulls are yelling that this is a brand new industrial revolution, and on the other side, the bears are screaming that this is a textbook speculative bubble just fueled by pure hype and valuations that have completely lost touch with reality. The bulls make a pretty compelling case. They say, hey, this is nothing like the dot-com crash. Unlike those old startups that were burning cash, these companies are gushing profits. AI isn't just a buzzword, it's already bringing in real, hard revenue. They see it as a genuinely transformational technology, like electricity or the internet, and that justifies the mind-boggling investment we're seeing.
But hold on, the bears see all the classic warning signs flashing red. Valuations are right back at those dizzying dot-com peak levels. The sentiment is just euphoric. I mean, get this, Nvidia's stock actually fell after they reported that incredible growth, just because it wasn't even more incredible. And on top of that, there's a growing worry that all this massive spending on AI just isn't delivering a clear return on investment for the people buying it.
And look, this warning isn't just coming from the usual skeptics. Even the CEO of OpenAI, Sam Altman, a guy at the absolute center of the AI boom, has straight up warned that the sector might be in a bubble and that investors are just overexcited.
Maybe a better comparison here isn't the dot-com bust, but the telecom bubble. Back then, just like now, you had wildly profitable companies selling the picks and shovels for a very real revolution, the internet.
But the investment cycle got way ahead of itself, it was totally unsustainable, and it all came crashing down. The risk today might not be that AI is fake, but that the spending cycle is just too hot to last.
Okay, let's try and bring this all home. What on earth does this incredibly complicated picture actually mean for you?
So after everything we've just gone through, what are the key things you should really walk away with?
First, and this is crucial, don't just lump them all together. They are not a monolith. You have to look at each company's unique situation. Second, please be aware of that huge concentration risk, especially if you're in passive index funds. Third, remember that profitability is the name of the game. All this investment has to turn into real, durable cash flow eventually. And finally, you have to know what kind of bet you're making. Are you betting on the picks and shovels or on the gold miners themselves?
And just to be super clear, concentration risk is basically having way too many of your eggs in one basket. And right now, with nearly a third of the S&P 500 sitting in just 7 stocks, that basket is getting really full for a lot of people.
And that brings us right back to where we started. The rise of these 7 giants represents a multi-trillion-dollar bet on the future of artificial intelligence. Will history look back at this moment as the dawn of a new industrial revolution? Or are we just witnessing the inflation of the world's most magnificent bubble? The answer to that question is going to define the next decade of our economy, for sure.
All right, the learning doesn't have to stop here. If you want to explore even more, I've built the perfect place for you at sophie-ai-finance.com to unlock a new way of learning. Think of it as your personal learning toolkit. If you just want the big picture, you can watch the video or listen to the podcast. It's perfect for getting the main concepts down while you're on the go. But if sometimes you need to hit the pause button and really let an idea sink in, you can visit the blog article. It has all the details, charts, and text from our discussion so you can review everything at your own pace. And for those of you who want to see all the math, data, and the complete nitty-gritty behind the analysis, well, I've got a full research paper waiting for you, so you can really dig into the details and see how everything works under the hood. It's all there, all for you. And hey, if you have any ideas for new topics about finance and AI you'd like me to cover, please leave me a message. Thanks for tuning in, and I'll see you in the next video.